On this week's inaugural episode 1 of Walrus's Theta Farm, we're selling cash-secured puts on Alcoa Aluminum, PLTR, Workhorse, and Microvast, and we're going to be collecting a 2.09% premium on the collateral that we've used. Hey everybody, Walrus here from Walrus Street with our first episode of my Theta Farm. Before we get started, I just want to remind you that I am not a financial professional. All information in this video is for entertainment purposes only. Today's video is going to be a little bit wonky for our first episode. I got my second COVID vaccination. I was feeling a little bit sick, so I just recorded the screen on my phone when I was making the trades, and now that I'm feeling better, I'm going to go back and narrate past tense what I was doing. Going into the future, I'll do my trades live and record and narrate as I'm doing them, so the flow is a lot more smooth. Bear with me on this first episode. Let's get into how I made my decisions. Now, if you haven't already checked out my prelude videos so far, talking about some of the vocabulary for Theta Wheel, please do so. I do have 2 more of those introductory videos coming out. One of them is going to be talking about days to expiration. The other one is going to be talking about how to screen stocks. I'm going to go a little bit into how I screen some stocks this week, just so you guys can understand what I did. My first resource that I go to is Barchart.com. I go to the options tab on the top. I click on IV rank and IV percentile, and then I sort by implied volatility. And right here, you could see Cortexime is sitting at 493%, which is ridiculous. But I like to look at my IV stocks that are somewhere between 50% and the max. And on Barchart, if you go to page 3, so this is a little above 200 stocks, you'll get to about the 50% level. So you don't have to go through a lot, just 2 tabs. Then by the third, you're sitting around 50%. That's just my personal screener. Now, also, because I'm looking for low beta stocks, low correlation, I'm checking correlation with the S&P 500, and I know that's not the greatest using the SPY ETF for like small caps, but SPY tends to reflect the entire market, so I am looking for correlation. And just for an example, if you're going to use Portfolio Visualizer, you just type in 2 tickers with a comma separating them, no space, you hit enter, and it'll give you the correlation coefficients. Obviously, the lower the number, the better, the less correlation there is. When I went through Portfolio Visualizer and Barchart, this is the list of stocks that I chose. I went from about 250 stocks down to just these 17. These are tickers that I'm comfortable with, that I understand the charts for. What I did was I recorded the price per share, the SPY correlation from Portfolio Visualizer, the IV from Barchart, the days to expiration of the nearest option from Webull, the absolute value of the delta from Webull, the strike and the premium for that delta, and then the percent of my collateral that it would require. Now, to get this percent of collateral, $16, $600, the percent of your collateral here is going to be about 2.67. So you can see how I figured all these out. Now, the next thing I did was I color coded based on which ones I like. I did green for the ones I liked, yellow for the ones that I wasn't sure of, and red for the rest of them. Just for visualization purposes, explanation purposes, I marked what I did not like on this sheet in bold. With metamaterials, I did not like the days to expiration. I would have to wait 28 days for this. The percent was really great, but the chart doesn't look good for 28 days, and I felt like there was a very strong risk I would get assigned. For Citius Pharmaceuticals, you guys know I love Citius, but there were no deltas anywhere that I wanted to even come close to, and it just looked like way too high risk of assignment. And remember, when you're running the wheel, you don't want to get assigned. Sensonics, this one, there was a problem with the delta. The closest delta I could get was 0.25, and this only gave me a 3.33% return, which didn't seem like a very good risk reward proposition when Sensonics is a very risky stock in general. Pubmatic, I didn't like waiting 28 days on this one. The chart looked like crap, partially because of the Snapchat earnings killing all of the advertisers, so that was my decision there. BlackBerry, I ruled it out because of the share price. It recently peaked and it was still coming off the peak, and it just looked like it was too expensive to buy into right now. Zim, same thing. It's been kind of riding really high, and I know it's going to tank by the time you see this video because of the containers falling off the ship over the weekend. You're not supposed to do that, but I didn't have knowledge of that on Friday. I was just looking at the share price and the days to expiration. It didn't look like a very attractive proposition, and just for illustrative purposes, I included Intel and Citibank. These are 2 larger stocks, more mainstream stocks that I would consider selling puts on and running the wheel on, but their percent of collateral, it's just such a low return for the IV. I mean, we're getting like no return here. here. Also, I do want to point out that the SPY correlation, Intel is kind of a high beta stock, 0.7. It's almost correlated with the SPY ETF because it's a big cap tech stock and it's just highly correlated. Same thing with Citibank. So for those reasons, I ended up throwing these two out. For my maybes, Bionanogenomics, I ruled this one out because I already have a large holding and I didn't really want to add to that in case I got assigned. Robinhood, Cameco, and Cliffs were all reporting their earnings, and I don't like running the Theta wheel around earnings, even though I love Cliff, you guys know that. I just didn't want to do it around earnings. Occidental Petroleum, the price has run up pretty significantly, and I think it's due for a pullback, so even though I'm okay with this, it's actually got really similar numbers all across the board to Alcoa Aluminum, which I ended up choosing, and Occidental is actually cheaper per share, which is less collateral, so I could open another position. Technically, I just didn't want to do it because I didn't like the chart on Occidental. So that left me with Workhorse, Microvast, Alcoa Aluminum, and Palantir. Let's take a look at the trades. So you could take a look at my portfolio, total account value, cash. There's about $9,000 in cash in the account. I have some positions open like my Kubient bags, but first thing we're going to do is look for Alcoa Aluminum. So I'm going to go ahead and search for AA, pull up the chart. I'm going to double check the chart first. And on the chart, I could see that we are in a downtrend. We're not near a high. So this looks like a very appealing chart to run some puts on. So I go to the options tab. So we're going to go to the 7 days to expiration, and we're going to be scrolling down closer to the price here so we could see where the current trading price is. Now I'm going to scroll to the right, check out the delta, and I could see this 32 delta on the 48 right here. So I'm going to scroll back over, and I'm going to hit the 70-cent bid, and this is going to be for selling my puts. And it's kind of weird because green is going to be for selling, red is for buying. I'm going to go ahead and click the buy to sell in the middle of the screen, and once I do that, I'm going to double check all my information. Sell put 48, 29th of October, everything looks really good. So we're going to go ahead and hit the next button. Once I hit next, it's going to pull up the next screen, and I'm going to go ahead and double check everything one more time. Limit order 70 for the price, that's what we saw. 1 day, I'll go ahead and just make sure I get a fill here. I should get a fill. The volume was pretty decent, so we're going to go ahead and confirm this all the way through. You could see my premium, my credit, $70 instantly, and boom, option order was filled. We're good to go. So that was pretty easy. We went ahead and sold a put. We got $70 premium credited right to our account. Collateral was $4,800. So now let's go to the next talk. I'm going to do Palantir. And for Palantir, we're going to check the chart. Again, this one's kind of flat. The chart looks okay. So we're going to go to the options. We're going to go to 7 days to expiration. Try to get this weekly. Scroll down, find the price. And then we're going to go ahead and scroll over again. And we're going to take a look at the delta. And you could see there's a 38 delta and a 20. And I don't love this, but I am going to go for the 38. It's a little riskier, but I like Palantir. We're going to go ahead and hit the 37-cent bid. So this is going to be a $37 premium for these $24 puts. Now, same thing as before, we're going to hit that buy button and make it a sell. So we're going to be selling these puts. Move to the next screen, limit, check the limit price, 37 cents. That's right. We're going to go ahead and confirm this out. Collect our $37 premium. We already got a fill. Now, next up, we're going to search for Workhorse, WKHS. Take a look at the chart. Price action has dropped, so we're not buying in at a high point. That's really good. Let's go over to the options tab. And on the options tab, we're going to go out 7 days, scroll over, check the delta. The higher delta is coming in at 38, so that's not ideal, but we're going to take these $6 ones, and we're going to click on the $21 premium right here. We're going to be selling this, placing our bid. So change buy to sell since we're coming in from the other side. Hit next. We're going to scroll down, double check the premium, the price, everything looks good. We're going to go ahead and hit that sell button, and we're going to confirm. We're going to be collecting this $21 in premium instantly off of just $600 in collateral. That's not too bad. Order was filled right away. Good volume on this one. Now, the last one that we were looking at today is Microvast MVST. Now, for Microvast, let's take a look at the chart. Once again, it's looking okay. Go to the options. For this one, there's no 7 day, and you could see I'm like misclicking all over my screen, but we have to go out for the 28 day. And if you look at the delta, there's actually a 30 delta. It's like 29.66 delta. That's really great for the $7 one right here. So for this $7 one, we've got a 50-cent bid. We're going to click on that. We're going to switch from buy to sell one more time. and then we're going to hit next. We're going to come down, double check everything. We see 50 cents for the price. That's going to be our premium of $50. We're going to hit the sell button. There's our estimated premium, confirm, and immediately the option was filled. So that's it. It was that easy. It was that fast. I got fills on everything that I wanted. Usually when you're doing these wheels with the 30 delta for a weekly, you get really quick fills because you're not looking for anything extreme. The options that are closer to being in the money have a very high open interest, a very high trading volume, so you typically get fills very quickly. Now, let's take a look at one more spreadsheet I put together, and I'm going to make this a little bit prettier later, but this is going to be my trade summary. Now, I'm going to put both of my spreadsheets below the video, and you guys can check out my statistics sheet on my stock screening, and then you can see my trades right here. And the columns that I decided to put in, my ticker, my classification, whether it's a new or an old position. And because one of these is a 28 data expiration, I will have one old position next week on Microvast. I put in the number of contracts that I bought. I only bought one contract. I put in the strike price, the option type, because right now I'm selling puts to start, but eventually I'll get assigned, who knows, maybe this week, and then I'll be selling calls after that. My purchase date, the expiration date, most of this is the same, again, except for Microvast. Days to expiration, you could see 7s for most of them, weeklies, and then the 28. The collateral that I had to put up. Now, to find the collateral, you just multiply the strike price by 100, since options are sold in 100 share lots. I did an adjusted collateral column, and this doesn't really serve a purpose, but if I usually try to sell weeklies, then I want to kind of adjust and see how much effectively I'm putting forward for something like a 28 data expiration. So I basically just divided this by 4. You could see all of the formulas that I put into the sheet. The premium is right here. I adjusted the premium again just to carry it out over the 4 weeks, and I have the percent of the collateral all around. You can see the companies like Alcoa and Palantir that are a little more stable end up giving kind of a lower percent return on the collateral, whereas the EV companies, Workhorse and Microvast, give you a higher return, and that just makes a lot of sense. All of my positions are still open. So let's go over to the summary. These are the big numbers. So this week, out of my $9,000 in cash in that account, I ended up using $8,500 in total collateral. I collected $178 in premium, and on my collateral, this is a return of 2.09%. Now, some of you might be thinking, oh wow, I just watched this entire video for a 2.09% return, but keep in mind, interest is compounding, and the entire S&P is only up, what, 20%-ish on this year, and I just pulled 2% in a single week of doing Theta Wheel, and this is relatively safe. Yes, I know I took a gamble there on Microvast and on Workhorse, but at the same time, that was such a small percent of the collateral in my portfolio. The majority of my position was in Alcoa and Palantir, which are much safer options, I think anybody would agree, than Microvast and Workhorse. So as long as you structure your trades appropriately and you keep your risk about the same, this is the type of return that you can be looking at. I'm going to be aiming every week to be getting something between 1.5 and 2.5%. So this 2.09%, right in the middle of my range, it's in the sweet spot. I'm happy. Ready to go. That's it for today. I hope you guys did enjoy the video. If you want to support the channel, please check out my Webull referral link below the video. If you sign up for an account, deposit $100, you get a free stock, I get a free stock, everybody wins. Also, if you enjoyed the content today, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, keep an eye out for this series uploading every Tuesday. Hope you guys enjoyed it. Good luck trading this week. Stay safe, and I'll see you next time.